The bears are eating now, and it's the bulls that are going hungry. Wall Street seems to have lost its appetite for risk as we're seeing some rotation. The Dow had a decent day today, while the NASDAQ was having the most trouble. We had a small push up on the news that the government shutdown was coming to an end, but it wasn't enough to keep stocks climbing. It could have been more or less the bears covering their positions and waiting to see what happened next. And what didn't happen next? Well, buying volume on the part of institutional money didn't come flooding in. There was no panic that folks were going to get left behind. Everybody right now is feeling a bit of contentment, waiting for some of these big tech players to come back to them. Smart money is showing patience right now. Are you? Meta has come back and we got a little pop. I've been talking about it a lot. If you had taken risk at the $600 mark, you got to bounce all the way up to $635. But we didn't get over the mile marker or the trigger for the next leg higher. So I spent a lot of time charting today, and I've come up with a new scoring system for stocks. I always talk about how we trade trend as price, structure, momentum, and volume. And so I've come up with the PSMV score. And I took the afternoon to apply it to some of my favorite stocks and stocks that I've talked about on this channel. And I'll tell you, the outcome even surprised me. Some stocks that I thought were a bit more bullish, when I took the time to thoroughly vet them according to the PSMV scoring system that I created, I found out that they were a bit choppy or more neutral, not as bullish as I had thought. And so I'm going to share some of those findings with you. We're going to go over some headline news. I'm going to dive in a little bit on some updated thoughts on Meta. Welcome to Wall Street. This is the Stocks with Josh show. Thank you for watching the video and just hitting the like for me and dropping a heart in the comments and saying hi. I don't mention it all the time, but watch out for scammers who impersonate me in the comment sections here and on other social media apps. There are full-time folks trying to trick you. I'll never ask you to send me your money. I won't offer to copy trade for you, nor introduce you to any opportunity that I'm not talking about here on YouTube. You can join my pro trading community where we have 8 live trade sessions and now 5 teaching sessions throughout each and every week. It's the name of the show, Stocks with Josh. You go to the website, www.stockswithjosh.com. Stop trading alone, learn to chart, come and join us. All right, let's talk about some headline news right now. I want to cover Rigetti. Their revenue fell short of market expectations and the stock sold off. CoreWeave earnings was the one that really affected NVIDIA today. NVIDIA had been pushing higher yesterday, but CoreWeave's earnings, they didn't give the forward guidance the market was looking for, and it caused that to drop from yesterday's high to today's low over 17% on bad future guidance. As I said in yesterday's video, for AI to continue, it's got to maintain that momentum and that acceleration of revenues and profits and opportunities with better forward guidance. It's the only reason why Wall Street won't sell right now, is they've got to be given a very high incentive to hold. In addition to CoreWeave's impact on NVIDIA, SoftBank came out and announced that they had sold their entire $5.83 billion position in NVIDIA, and that, of course, didn't go over well for the market. We also got an update on the ADP report. They showed that private sector jobs were down 11,000 per week each week of October. This is just another reason why I've been saying that the Fed missed the opportunity to give the cut the market needed. I don't know if it's political, but every time I see the Fed do something that doesn't make sense, I have to wonder why. And then Meta. Meta ran into some trouble. In addition to being in the middle of a pullback, there's been a lot of people questioning, of course, their ROAI, which is their return on artificial intelligence spending. But then they lost their chief AI scientist. He is leaving to go start his own AI startup. And they have struggled to hold some of the top talent that they had secured. He is one in a line of many that recently that have been leaving the organization. And the impact of this is that many are arguing that Meta is falling behind in the AI race, spending billions, but that their AI system is in the 80th place compared to the performance of other large language models. So Meta is still in trouble right now, but it has stopped falling It just hasn't confirmed that it's time to go up. And so I want to caution you to be very, very careful and use a stop loss. We've come up off of those lows. I told you where structure was. I told you where it would bounce. It did, but it's failed to climb above the trigger level that I gave you, which means you better tighten up that stop loss or we're just going to go back to $600. I'm going to give you the PSMV score for Meta today, and it'll give you a sense of where they're at and where they're going next. And on that note, if Meta loses $600, it's going to flush hard to 580 and then 560. I'm not predicting that right now, but I will tell you that if Meta loses that $600 level, I am going to be shorting it and writing puts along with everybody else. I'm not going to dump my long-term Meta, but I'm definitely going to ride the move down to those other areas of support that I just gave you. You have been warned. Nike, this is one that's a sad story. Nike is an underdog that remains under the level of Wall Street's love and affection. They're not buying the stock. It is now officially all the way back to the 2020 pandemic fear-driven lows. So it is potentially getting to a place where it could be a turnaround story. But according to the PSMV score that I'm going to give to you today, it has yet to signal reversal. I'll break that down for you guys in a little bit. But I'm going to announce today a stock that I have greater than 50-50 conviction to make my November pick. Now, it's not ideal to go long and heavy into anything in a market that's clearly pulling back. But I have searched high and low for stocks that are holding up really well that may have a good move still here in November, and I've got one for you. And it's one that in the past I've said I'm too afraid to sell, and that's SoFi. SoFi has been a great stock to hold in the month of August and September, and I think that in November it's looking really, really good. But it comes with some caveats. And what does that mean? It comes with some disclaimers, some if-thens. I'm going to give you stop loss and breakout scenarios, because nothing at this point is entirely safe, because as I opened up the video, the bears are feasting now and the bulls are going hungry. So we need to be careful going long on anything. I'm going to give you the PSMV score for SoFi today. But before we get into that, we've got to get into some very interesting news. Now, why is SoFi doing so well? Because they've done everything right. And in addition to that, they're getting back heavy into the crypto game. They're following companies such as Robinhood and Coinbase. They're getting into crypto in a low regulation environment. It's the right time to do that. Let me share this story with you. SoFi is officially back in the crypto game. What investors should know. With today's launch, we are now the first and only nationally chartered bank to offer crypto trading to individuals. CEO Anthony Noto told Barron's. The blockchain allows us to create new channels for sending payments that are cheaper, faster, and safer. Noto said at the time he described crypto as a better technology we can drive more innovation from. Well, we all knew that, and I think they knew that as well. The problem was the fear of regulators coming down and penalizing them, but now they've put themselves out there as a leader, and the question is, what impact is it going to have on the stock? Well, I think it has a huge impact on the future profitability of the company, because I agree with the CEO. We all know that the blockchain is going to take over because it's faster and cheaper and superior to other financial transaction tools. It's just about who's willing to take the risk to bring it to market. Well, SoFi said that's us. And I think it's one of the reasons why, even though we're in a pullback, SoFi's really been holding strong. Let's go over their PSMV. And you might say, Josh, what does this PSMV stand for? It's the four things that I talk about on this channel all the time. Price, which is a visual representation of the trend. So we're talking about trend. Structure, the structures that develop that we either break out of or break down below. And then momentum, that's going to be your MACD and your RSI. That shows the strength of a move. And then volume shows the conviction. Is smart money showing up to this SoFi party? And I'm going to break down all those categories and then give the stock an overall PSMV score. So for price action, they get an 8 out of 10. The weekly trend is firmly up with shallow pullbacks and price consolidation all around 30. So price gets an 8 out of 10 score. And that will confirm the move up to $34, $35. and it's been doing that while holding the $28 structural level. So the structure is intact, and it's currently breaking out of it. If it can close the weekly above that 31.32, we are on to 34.35 next. So momentum looks pretty good. I gave it a 6 out of 10 score because it's in the bull camp, but it recently, because of all the movement that we've had up over the last couple months, it's cooling off a little bit, and that's a good sign, because if it cools off and comes down a little bit on some good news, it could reaccelerate. So the momentum looks fine on SoFi right now. And then you've got volume, and that gets a 6 out of 10 score. Volume is perhaps the most important indicator after price when you're analyzing a stock, because the question is who's buying it, and that shows up in the volume. Accumulation has been steady, not explosive, which means that this stock has been slowly getting stealth accumulated by Wall Street. So what we're going to be looking for is on the next leg, we need price expansion, which means that it simply breaks out and price runs away. That's what we're watching for on SoFi. Now, let's be clear. You need to have a stop loss. I mentioned that the structure was holding the $28 level, and that's a great place to consider putting your stop loss beneath at maybe $27.50, because if that level gets broken, the uptrend for now is put on hold. It doesn't mean that SoFi won't be a great investment in the years to come. It just means it's going to pull back more. So that's why we trade price, structure, momentum, and volume. Structure is extremely important, and the structural level of support is $28, so keep that in mind. 32 is the structure that we have been struggling to get above. So if we do close a weekly candle above 32, we can expect that quick move up to 35 and even as high as 39. And I want to remind you, when I've charted this in the Stocks with Josh Discord in the past, I pointed out that the golden pocket is all the way up between $55 and $60 on SoFi. And so the overall secular trend has more room before anybody considers this to be extremely overbought. Now, in my coming videos, I'm going to break down this PSMV score, but I'll just highlight a couple stocks that I've talked about in recent days. LMND, Lemonade's PSMV score is very high. It's at an 810. But Meta's PSMV score, unfortunately, is very low. It's at a 310. Now, I spent some time coming up with a system of gauging when a stock gets too hot, above 8.5 on the PSMV. Now, this isn't anything you can find anywhere else but here on my show. If you're wondering, where did all this come from? This is what I've developed. And so I'm explaining it to you as we go and as I'm developing it. But I figured out that if it gets above 8.5, that the stock has become too hot. Lemonade is sitting at 8, which means there's more room higher, but it's very close to getting overcooked. And Meta is sitting at a 310. And if it goes any lower, then it's prime for a potential bounce and reversal. And so anything below a 3 score on the PSMV with a kick up in volume that has to be greater than 1.2 times its 20-day moving average volume, that means it's ready for everybody to buy and go long again. And that hasn't happened. So Meta's not giving us that full-blown reversal signal, and it recently failed to get above that 636 price that I told you it needed to get up to 660 or 670. Keep an eye out, because that could happen at any given moment. And I will continue to use this system to break down the health and strength of stocks in the days ahead. But officially, as of for now, SoFi is my November pick. Register it, and we'll talk about it again soon, but it's not immune to the pullback, which means you need to trade the structure as I've explained today. Let me know what you guys think. If you think SoFi is a good pick for November, I'd love to hear your opinion on it. Or if you think everything's pulling back because only the bears are going to eat in November, how bearish or bullish are you feeling right now? I'm still not feeling terribly bearish. What I would say is I feel neutral. I feel like the market needs to give us more direction. And right now, the tolerance for risk seems low. And Wall Street isn't panic selling, but they're just not buying anymore. And as a result, the markets are slowly melting down still. And it means that the markets are susceptible to higher volatility, which means any news story could cause us to rip back up to the top, or a bad news story could cause us to have a bad day. Let me know what you guys think. Peace and blessings. Don't sleep on the Stocks with Josh Discord. I dropped 10 of my favorite stocks and gave each of them a PSMV score, as well as some breakout or breakdown levels or stop loss levels, stocks that I've talked about on this show in the Goat Alert section of the Stocks with Josh Discord. If you're interested, there's a link in the top pinned comment to the webpage. I hope to see you over there. Peace and blessings. Let me take a quick station break to tell you about the Moomoo investment app. If you're looking for better trade tools or you just want to get more out of your broker, check out their latest offer. Right now, Moomoo is giving new users up to $1,000 in NVDA stock just for making a deposit. And any idle cash you put into the account, you can earn up to 8.1% annual percentage yield for the first few months and 4.1% after that, which is still higher than most banks. This offer is only available for users in the United States and only available for a limited time, so hit the link, check it out on their website, read the fine print, and see for yourself.